Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for stopping by the lab today. This stream is about integrating Bookmap OrderFlow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Thank you, Dan, and thanks, Marty. This is really about the business of trading and understanding that the business is very much process oriented. It is not about being right or guessing or predicting. We are in an environment that's 100% random 100% of the time. And what's so important about this is not to be rigid, but to become fluid. Now, as you're developing, you are going to become mechanical, and you're going to also find that rigidity and not recognizing change is going to be your biggest obstacle. The other part of change, and part of what makes, of course, trading difficult, besides being in an environment that's 100% random 100% of the time, is that we're operating in multiple time frames. So we might think maybe that the higher time frame is down after yesterday's Acapulco cliff dive, and yet because today is Friday before a holiday on Monday where the exchange is closed, President's Day, we can then anticipate two possibilities. And here's what they are, and then we'll get into it. When you have a major sell-off like we had, and I think we were down 1,000 points or whatever. I don't look at the Dow, but it was kind of nasty, over 1%. That's a big major move down. In fact, I did my stream yesterday was about major moves, and the previous two streams, which you should watch, at least to get a high level overview of how you set a day up, and then in one time frame, and then a line in a shorter time frame. So the same thing happened here, but because we're short, the market is short. And remember how the market works. The market goes up to go down and goes down to go up. If you have a major sell-off, like yesterday, ahead of a 3-day weekend, and today is Friday, here's what you might anticipate. Those who are still long or missed the boat, FOMO, are going to sell early for continuation shorts, which is what we did this morning in the Trader Lab, or some of us did if it's aligned with our plan. The other part of it is once we get those shorts done and we don't have additional selling, while we can have rotations that we can trade, we also need to be aware of the potential squeeze. So that's the other part. So how do you put this together in a trade plan? Well, I tried to share that idea with you. And the other part about this is it's not about flipping and flopping, short, long, short, long. As a developing trader, at least what I've found, and I've worked with a lot of traders over the years, mentored traders and the rest of it. I've been doing it 47 years, so I've made all the mistakes already. Well, not all of them, but hopefully I don't have many more to do, right? Because I'm human and everybody does make errors at times. But I've walked in your shoes. I've woken up in the same place over and over again with something that looks good, something that makes profits and yet loses. That means it doesn't have an edge, though it has random winners. You're in the same boat and you might not know it. So that's why I created Trader Lab. That's why it's open to you at no cost. And the reason for this is that you don't waste time trying to fix a defective process. Now, your process might be terrific. I'm not saying it isn't. But if you're leaking equity, you need to be looking at why. Now, let's take care of business, and I have a little something to tell you about. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. Dan, can you please confirm the blue jacket, what the actual prize is for this, besides the wonderful blue jacket itself? What else is part of this contest? Because I might have left that out. So Dan, can you clarify that? And how are we doing in YouTube today, guys? Hope you're all alive and well and that you've been okay in this volatility and extreme behavior. Dan, can you put that in the chat, please? Just something quick. Or is my chat frozen? Maybe we're frozen here. Can somebody just post? Okay. Okay, here's the contest. You can get, and this is how you do this, you need to show your trades on Bookmap. Entries, exits, limit stops. It can be done on replays. It could be static shots of anything. Just show your trades. Replays, actual trades, anything you do. But it needs to be executed on Bookmap. And then not only can you get the coveted blue jacket, but you also can get 3 months of Global Plus with stocks or futures data. Now, if you win the blue jacket, you get an invite to the Bookmap Academy. You must show your trades in Bookmap. If you can't trade via Bookmap, do it in Sim or Replay. There you go. That's it. Don't miss out. Get those submissions in. Now, let's get on with it, as they say. Now, I'm going to show you higher time frame. And if you guys, let me see if I got everything still on here. Might have taken some stuff off. Yeah, I want to concentrate on this. Now, if you guys remember, on these days, I was looking for getting higher to take these stops out. And you're probably going to go, oh, you got it wrong. I'm going to say, well, I don't know what's wrong. I'll tell you what's wrong when you don't follow your plan. Right, wrong is not part of this business. The business is alignment. You have to remember that. So at least what I do is I'm not rigid, and I'm not saying this is the best way to trade. I'm just saying this is what I do, and it seems to work okay. I have a plan, and when I have a plan, I look to see if the behavior aligns with the plan. Now, yesterday morning, the plan was longs initially, and part of this had to do with opening over this yellow box, which is called value area high. 70% of the volume for this day took place in here, and we opened right about here yesterday. Now, here's why it was long. If I open in range out of value where 70% of the volume was, and the highest volume yesterday or retail price was right here, that yellow line, that's the high volume. So if I'm, and this is the fair area where most of the business was done, so that's why it's called the value area. Retail price, and then this is where most of the fair trade was, so it has this like curve. Well, if I open above it, in our context grid sheet, just so you know where this comes from, it suggests the market's out of balance. If the market's out of balance, we can basically, there's two possibilities. We can go up, squeeze, because there's shorts in here. So that was my trade in the morning. Or, here's the, part of the thrill, is if we find too high, which, wherever that is, and this was the ETH high right here, which is the first target on the long. So in the stream yesterday, it was longs, ETH high, and then, wherever. Instead, we fell out of this early trade, broke down under a structured trigger in a trade into value, and that sets up a return to the retail price, a return down here, and there's over an 82% probability we take out either the previous day's high or low. Given the failure at the top, it was this, and then the stops there. And now at this point, I have no clue. I just want you to know I'm the clueless one. And then I was looking here at 85, and then wherever, and the next target for me was 26. So it was 70, 26, and I have no idea. So let's not worry about that. Now let's come back to what we know. In this day, we have the Acapulco cliff dive, okay? Everybody who's long in here, in the stops under here, got thrown under the bus. Headline news, I'm sure CNN and maybe Jim Cramer were talking about, oh, how terrible. Whatever. I don't know. I don't watch it. But here's what I know. I know that anybody who didn't get out yesterday, if that's what their inclination is going to sell today. Follow through selling. The other thing I know is this level down here, 21, was too low. Is everybody with me so far? This is all material to what's going to happen today. I hope this makes sense. Now let's get into this. Let's go to Bookmap. And you guys know what Bookmap is. It's a high-tier order flow tool. First piece, what was the level I said that was important down below? Naked volume point of control, 21. What does that represent, you're asking? Let me show you. Retail price here. This is shopping. The retail price from here was too low. Oh, it's on sale. We're out of here, right? Now, what happens if I come back to a price previously, 21? Might it behave like this? Now, I don't know. So don't think I know anything. In fact, I can tell you exactly what I know. I know I don't know. So what I know is if I don't know, I need to understand how the market works. Do you understand how the market works? It isn't your indicators. It's the auction. The auction is a pricing mechanism. If you don't understand how the market works, I think you're going to be at a substantial disadvantage. The market is not defined by backwards looking moving average derivative indicators. That is not where, in my opinion, you need to differentiate yourself. If you're doing that, you're just doing what other retail traders do. And you probably are aware that the outcome for most retail traders is not good. It is not sustainable, though they all have random winning trades. Okay, so what do we have to do? Maybe something different. If this becomes too low, and this is the last time we were down here, and this was too low, that's where it's located. There's the ETH low. And that right there sets up an understanding that we may have found too low. Now what do I know? Yesterday's low. That's nice. What else do I know? The ETH, volume point of control. What is this volume point of control stuff? It's high volume. High volume is shopping. Don't forget what this is. High volume is shopping. Really. Now, here's the part that's so interesting and why this is how I trade, and not most, many full-time professional traders use this as a chassis. Now, how you slice and dice it is time frame specific. Does that make sense? So if it's time frame specific, the higher time frame trend might be down. I don't know. What do you think? Or the shorter time frame, developing time frame that we actually trade in might be long. How do you reconcile that? Well, for me, I just pick a side, I wear a helmet, and I take my trades. I try to align with the dominant side as I see it. I also understand market mechanics, and market mechanics are based on also retail trader behavior. What do? FOMO, panic, sell in the hole, get squeezed. Doesn't it happen to you? Certainly happened to me. So what do? I learned from those experiences. I paid for an education, and I'm a slow learner. So how many times did I have to sell in the hole to know that I was actually in the hole? Well, I understand this behavior. I can't predict it. I don't know if it'll show up, when it'll show up. I don't know anything. So I know I don't know. Remember, I don't know. What I do know is how the market works, and can I recognize potential change. And I will not know it has changed until hindsight. That means I will get out of alignment and I will take stops. when the rotations that I'm trading are now being bought up by the other side if I'm fading. Okay, so I take stops, you take stops. We have to get over it. The thing we need to be able to do also is recognize potential change. So we know this is too low. We know this is yesterday's low. There's a high probability, remember, over 82% to take out yesterday's higher low. Which one are you going to lean on? What else do we know? We get those sellers. Then what? Potential squeeze. That's it. Is everybody with me? It's not more complicated than that as far as what might happen. Then you have to get into the actual behavior as it develops. Is that making some sense? And please give a like if you're visiting in YouTube. Hope you're getting something out of this. By the way, don't forget, we are closed for President's Day on Monday. There'll be no stream and no trade, unless you want to trade in the thin market or whatever you need to do. Me, I'm going to be doing research. What are you going to do? How are you going to use that time? So, RTH open. Let's go. If you have questions, please post them. Don't forget to review these streams. The Trader Lab is open to everybody. There's no cost for it. Now, we had some longs, I think. I don't remember anymore now. Maybe shorts in the ETH, but I did post them in Trader Lab. Guys, I don't call trades. I'm ignorant. I really am. And when I say ignorant, I really should say clueless, because I'm really not ignorant. I'm clueless. This is a level up above. Now, RTH open. What am I looking for? What was my plan? Continuation selling. 82% probability or so to take this out or the high. Me, I'm going to take a wild guess. I'm going for this. And then I have targets below. What is my target below? ETH high or low. Well, this tested this. Maybe this is too low, but I have over 90%, 98% probability to take out either the ETH high low. It could be either one. So, and I have my ETH high up here. And there's more, I think. Where's my naked volume point of control? Losing my mind. Hold on a second. Oh, this. Yeah, and this is a potential target also. So if I'm below this, I'm going to be looking at shorts. I also am aware I can come back here. So in my plan, I have this for longs, but I'm looking for the 82% and maybe, and it doesn't have to go here, to check this in the RTH and this. Okay? Everybody with me so far? Okay, let's look. So I come up here and notice what's sitting over here. This is like the Rock of Gibraltar. Do you look over here in the limit order book and see there's 659 limit orders? You do notice there's not much else going on here. It's a microcomposite low volume node. So I'm at an outside edge, and this is in the higher time frame. I'm not going to spend time with it. I go over these things really every stream and, different pieces. I want to show you the trades. Now, when I say the trades, I'm only talking about me. I'm not saying they're good. I'm not saying you can't do better. It's just a trade plan. It does not need to be your plan, and it shouldn't be your plan. I also want to stress that in the Trader Lab, I continually remind traders that the primary trade that shows up most of the time that you need to become expert is something called mean reversion. Mean reversion is called outside-in trading. Now, in the open, this is the most aggressive trade that I have shared. And it is very difficult, and it's not, and I always say this is not where developing traders should trade. I always show the trade, but it's not where you should trade. This is where you should learn to read the market. This is like speed reading, because this is happening. This is RTH open. Now at RTH open, there's no volume. So since we're using the volume profile, as volume comes in, this yellow line in the developing daily time frame represents the fair price. And the nature of the market is to, remember, check pricing, and if it finds too high somewhere, or it gets to an outside edge somewhere, and we have alignment with liquidity, which is what order flow is about, and there's 600 guys sitting out here, and I come up and I have absorption, and I see my icebergs, and I get a sweep, and this sweep is suggesting to me higher, and I break low. Now follow closely. Let's look at what we know. I know my sellers are there, ETH, right before they open. I have my buyers right here. Let me just look at something else here for you. Overnight volume point of control has, I'm going to suggest ballpark, about an 80% probability retail price. So if I open and I go down, and I'm in big detail here, you can see I really opened it up, and I have full session VWAP and I have resting liquidity. I get this selling here. All right, now what? Did I have a short? No, I don't have a short. I'm here with my jaw on the ground. Really? Yeah, I am. I don't know. Do you? I don't know. What do I know? I know about this. So I'm looking for a couple of things. Continuation selling, but also if we open down near yesterday's low and you came in short overnight, might you cover? So it sets up two scenarios. Selling, short covering, and then if the short covering at this time is weak, those who are trapped and want to get out may sell, so you can get down, up, down, whatever. This part we don't know. So what I know is I want to take shorts because I think, because of my over 80% probability, that until this gets taken out, go south. So let's see the trade. Everybody, this is the rationale for looking for the trades, not predicting them and where. So I know about this thing, and right here I see absorption. It doesn't pull. I see the break. I see a sweep. A sweep suggests, now this sweep suggests up. It does the opposite. Okay, that's nice. Now what do I know here? Let me show you. Now this is microstructure. This and this is the same. Now you're going to go, what are you talking about? Great question. Let me show you. Let's talk about shopping for a moment. How does shopping work? This is high volume. Right there. You see that node? This is the store. And it's very important to think of trading like shopping. Absorption was here. So the sellers are here. Who knows? They could pull. We could break through, right? No clue. Break low. So what I know here is I had a seller. Now what else I know is I got buyers, 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 buyers. You see the buyers? And now my sellers. Now the first hint is here I break below it. That suggests maybe, and remember the best you have is maybe, this price might be too high. This is my trigger. Now it breaks low again. I'm really getting excited now because I have a valid trigger. My entry is here. I have this is resistance and this. My stop has to go above this. Let's see. And then where am I trying to go? I'm trying to go here. I'm trying to go here, 82% probability, and down the financial food chain. Let's just look. Sweep. I got this target, 82% probability. That was my first trade. Now, this is called VPOC migration. This is another opportunity, much more aggressive. Okay? Let me show it to you. Now, some of these, you have to vet these. These are not necessarily anybody's trades. Whoop, that didn't work. Hold on a second. I use a combination of structure, the auction and order flow. Maybe. Let me try to get this correct. Why would I look at this versus another location? Great question. Here's why. I had this here and this. I have a sweep, I have absorption, there you go, and I get the reaction. This is an important level because my buyers are here. I have buyers here, and I have buyers over here. So this area, let me just try to do this a little bit for you if I can. So this is like my area. My high volume is here. So this is the area I'm going to look at. If I get under here, and now this becomes my resistance. So if I choose, I can sell this, and I'm going to lean against this, and this, this, and this. So this is my outside edge. Break low. This is more, now this is problematic right here. This says counter rotation. So if I'm looking for a short and I'm going to look in here, I know the potential exists. That's all I got for a counter rotation. So if I'm not going to sell this, I'm going to look for the rotation because as a day trader, I'm trading rotations. Up here, let's look at the language. There's multiple elements. Watch. Now, I know this is difficult because what I'm doing is I'm operating in multiple time frames. And I understand this is a short time frame, okay, as you think of time. There's the high volume. But what else happens here? Too low, outside edge. This is like the buyers are here, so it's too low. This is too high. So outside edges, high volume. If I break away and I can't come back over this, and now I can't get back above this edge, this low volume area, I'm going south of the border. If I break below here and I can't regain it, you see this here? It's the same as that, higher time frame. So if I broke here and came back here, this is a reversion trade. Short. If I break here and come back here, it's a reversion trade. Short. Let me show you another one. Actually, I took this short up here, which is not anything more than just a trade. You know, it doesn't. And the thing, guys, you should not be thinking about doing what I do. You really have to find your groove. In other words, this is language. So what I'm doing is, if this is too high, and this is my target, it's called mean reversion. If it shifts up, my teeth are going to chatter right here. Because right here it says this is too low. Let's watch the language. I got to mark what's too low. It's a way of thinking of it, and it's just thinking of retail price in your store. And if a price is too high, you're not going to pay it. And because in a developing daily time frame, pricing is changing all the time, whether it's in this time frame or this time frame, it's the same. So if this is too high and this is my retail price, this shifts down, says too high. Where's my resistance? It's here. Too high, break. Now what's too high? This and this. So if I'm managing my trade, my stop is up here, once it gets down below here, and I know this is too high and this is too high, I can move my stop above here. High volume. I'm not paying that. And then down. Where was my buyers? They were over here. But I have 82%, you see? So I'm just following the yellow brick road. Let's follow the yellow brick road. VPOC migration. What does that say, Tom? It says when this breaks here, and this comes down, this is another trade for me. Now, the risk of this trade is that we cross over and come up here. And that's perfectly part of the thrill, But here's what I know. Let's come back to what I know. I was starting to show you this before. I'm sorry because there's multiple pieces running here. This up here is an auction where that little high volume is. If I break away from it, it's too high. Now let's keep moving in different time frames. Too high, too low, retail. I'm going up in time frame. If this is too high, and there's the outside edge, which is there, and I break below it, what does it tell me? Too high. I'm not paying that. Let's move to the next store. Too high, too low, too high, too low. Where is that? There's too low. There's too high. There's retail or high volume right there in the microstructure. Then I trigger, and then this drops down. So I've got this and this where the buyers were. And what happens? Let's look at this. What happens when you have support and it fails? What do you think? And where's the high volume? It's right there. So right in there. So if I get my trigger, that's a trigger, I can sell that, I can sell this. And my stop needs to go where? Out here or up here. That's just me. I'm not saying it's good. I'm just saying, hey. And then short. To where? ETH low. Next target. And naked volume point of control. Next target. Okay? Now we get below here. And these are my shorts, from this morning. Now, when I get below here and I test, I'm going, oh, this is wonderful. Of course. And this, I'm trying to remember. Yeah. So, and I'm getting my sweeps. The sweeps are giving me the warning Will Robinson moment. This is now my resistance. Right there. You see it? So what I know is here, look, anything can happen. Managing the trade, teeth always chattering, break low, little sigh of relief. This is now resistance. Look at what we have. Let's come down here. Let me show you microstructure. Now the microstructure in and of itself, depending on your plan, is not a reason to do anything. I want to show you micro. Let me open it up. And then we'll move right along. You guys have questions, please post them. I'll do my best. When you have questions, the best thing to do is use the link in the bottom of YouTube and visit the Trader Lab. I can't really, I'm a full-time trader, so when I'm not streaming, I do my best to trade because that's where my income comes from, so I got to do that. So anyway, sweep, location. I'm going to take you somewhere where nobody should go, but I'm going to help you see something that most traders are not aware of. Right here are buyers. Now we don't know that till hindsight. I have the sweep, which is a problem, right? And it can, do whatever it's going to do. Right here, right above here, this is an outside edge. I've got my liquidity. I'm below it. I think everything might be wonderful. I don't know. Out here is high volume. And this is going down with the scalpel. If I break above this, then I have found potentially too low. Now the problem with too low is it could just come up here and break down, or it could come up here and continue down if this is too high. So I already know based on the auction that this is too high, right? In other words, if we come out here and then come down, that's called mean reversion. That would be the mean. But if I push through, then the squeeze might be on. Let's see. So if you're trailing And what I do, and I'm not saying this is any good, I stay behind high volume because the only reason we're down here is because this was too high. And this was, you can kind of see how it works. I'm not paying that. Yeah, but it's on sale. Too high, break. The same thing. Too high, I'm out of here. Too low, I'm out of here. Now you come back the other way. Now maybe change or trade management opportunity. Is everybody with me? How we doing in YouTube? Are you guys okay? I just heard somebody's chin hit the desk. Did you, one of you pass out? Is this too much? Is this like drinking from a fire hose? Might be. Please give a like if you're visiting in YouTube. It's nice to be liked. Now, we come back. So we have the first hour's low. Who knew? And it's only 844. So those were, now have not taken a long trade, but of course that doesn't matter. There are long trades in here for the, for those. Now don't forget, I'm outside of yesterday's range. So if I'm outside of yesterday's range, I can look when we come back here to see if, what we do. So I am only on shorts, but remember my plan: continuation selling, and then the squeeze. That's my plan. Not saying it's any good. I'm just saying it's my plan, And then I just take the trades. I don't know. So now what do we see? Well, we know our short was up here, remember, 60, and the sellers are still in the book. I get VPOC migration. Let's use the language of the market again. Maybe this is now too low. So the VPOC migration, the language of the market, is suggesting the possibility that this is too low. And remember, this was resistance, right? Well, now I get above it. It might be support. I don't know. What do you think? Well, this is where my shorts were, right? So now I have VPOC migration going north. But what do I know? If my shorts were here, then I can either get additional selling and rotate, that's one possibility, or take the stops out above everybody who's short in this leg, and then depending where we go, if it's just a squeeze, short squeeze in a short time frame, I can sell it to come back here, and maybe rotate down somewhere. The somewhere is part of the thrill. So let's look at the next. Now, I never took a long today. I'm not saying it's a good idea. I'm just saying it's what I did. Take the liquidity. There's the resting liquidity. There's a sweep. The sweep sets up a potential short. Let's look at the behavior. Microstructure first. Now, when I see this, I want you to know, when I'm looking at this stuff, it's not mechanical. I'm at a location. I have a sweep. I see microstructure here. And as far as I know, now I see this. This is support for me. It's an order flow trigger. So I have volume there, microstructure. This is your fair price in this auction. Up here is this little thing here is an auction. Sellers are here, buyers are here. The high volume up here is right in here, right there. If it's too high, I can leave it. So right here, I know that this might be an area of interest for me. And again, I don't know. And I see liquidity starting to come up here. There's another piece. So I see this. And I'm aware I have a naked VPOC above me that has, I don't know, roughly a 67% probability. Past performance not indicative of future results. These are not trade recommendations. Okay, thank you. So there's my sweep. This is my alignment. This is my mini microstructure. This is not actionable. This is informative. When I see this, because I have a confluence, I'm already looking for a short. And again, looking for it is just waiting for a trigger. I have a pre-trigger, I have location, I have sweep. I'm just giving you the pieces. Watch. Short, there, or subject to your skill set, notice where we came back, the high volume in here, I'm going to draw you another little thing, is right there. So I have microstructure here, not able to do anything except get a heads up. Now I have more volume here, so I have resistance, which is not usable, except my stop goes here or up here. Again, that's up to you. That's trade plan. And where I'm trying to go is there, there, and down the financial food chain. Who knows? Let's see. Where do we come? Let's come back. I call this structured trading, and I built this out years ago for myself so I could have more discipline, because I'm like you. Sell it here, right? No, because of FOMO, and not sell it here because of fear. Is that you? By the way, it's all of us. So if we understand our emotional states, we have to find a way to manage our emotional states. For me, it was structured trades. In other words, not predictive, behavioral. And why might it do this? Why did the market go up? Well, why? Let's go back to the original hypothesis. Shorts first, trap, squeeze. Now the question becomes, even though I think we're going higher, maybe at some point, not my job, right? If I think we're going higher, I'm going to keep that in the back of my mind. But I also know if I have longs in here, that there's sell stops built in. And I know if there's going to be shorts in here, there's buy stops built in. This is what creates your rotations in all time frames. So I took this. There's my resistance. Stop is either there or there. This is the next target. You'll notice there's a sweep. Variable high volume node. This is support. This is now resistance, resistance. I'm managing my trade. I put my helmet on and I take my chances. I come to the mid. What do I know about the mid? Well, mechanical buyers. Maybe they're going to be right. So here they are. I have a sweep. And here's the possibilities. I come up, I hold this area, this, and continue lower, or I don't, and I come across the range, and then the trade's going to be over. Which one is it? Where's my resistance, Tom? See if you don't see something interesting. It's actually one tick down. Don't hold me to it. But I like to be accurate. Like to be, don't know if where is this? Trying to move this. Maybe I missed it. No. All right, enough. It's here. Okay, I'm not going to spend any more time trying to move it, okay? It takes too much time. So this is resistance. So I break, support, retail buyers. They might be right. Remember, random. Resistance, sweep, short, add, and you need to get below this, okay? I can't remember if I added here or not. I can't remember now. I thought I did, but maybe not. Okay. I don't know. I can't remember what I did here. I think I did. I think I took a short here, got scaled, and it's almost 10 points. It's like, so I got scaled, and I was going to come back down again, and I got taken out. Now, where's my next location? It's going to be back up here. What I'm doing is I'm using the high volume, which is over here, to lean on, because if it's too high, I go down. But if I come over it, then I'm going to squeeze, and I'm going to look where it was too high previously. This is the developing daily time frame. Remember how this works. That's too high. If this is too, now I can keep going. Remember that. So how do I work this? You're saying, watch. This is too high. Again, I don't know. What I do know is we can come here, and this is called mean reversion. Underline the term mean because it's random. I'm trading the short side because the higher time frame is short. And don't forget, I'm also keenly aware of short squeeze because it's Friday ahead of a 3-day weekend and it's in my plan. And if you're trading a Friday ahead of a 3-day weekend, you ought to put that in your plan, that if that the market's they're gonna flatten out. So that means if the market's short, you're going to get short covering and whatever. And it doesn't have to do that. It's just a probability. So I'm looking for a short and I don't know. Anything can happen. Let's look. I come back to this. Let's look what I have here. I have a sweep. I'm looking for counter rotation, but I don't have a location. You've heard of real estate, location. Sellers are right there. There's absorption. Why isn't the market going up, you're going to ask me. And I'm going to say there's a seller. When do I know there's a seller? When I break below the buyers, right there. Now, here's my high volume. In the developing daily time frame, this is the high volume. In the microstructure, this now is becoming the high volume, right? Here, multiple time frames, guys. So most of the volume is here. In the next time frame up, it's there. So too high, and now I have a suspect, a trigger. So now I have my sellers here. Who knows? And my teeth chatter. I'm going, really it is. I'm sitting here, and my brain starts flipping. But watch. What do you see? What did we do? Too high, too high, too high. Sellers are here. Now this is hard. Break. Where am I now? I'm below there. I'm below there. My sellers are still active over here. Break low. This is resistance. Break here. So here's what I can do. I can sell that against there. Stop here. And then where am I going to try to go? Great question. To get the stops at the mid. These guys. Thanks for playing. You get a coupon to the buffet. So the trade was to come back and get the longs out who had their stops over here. So I trade in the stops, and there's your stops. And possibly lower, I have no clue. And then I get this, and it's time to get out of Dodge. Trade management. Now, let's go back to resistance. Where's resistance, Tom? Where's resistance? Where was that? Trigger. Short. For me, not saying it's a good trade. Trying to come down here. And I have to be aware of this because this is where the buyers took over right here. Okay? So I took this short, got scaled, and I don't remember the outcome. Now you get a sweep here. So this is my short, there's my trigger, there's my entry. I can enter here. I'm risk neutral, and if I come back up here, there's the high volume. I'm SOL, as they say, sitting on leather. Let's look at the structure. There. Here's more structure. Same place. There. This can be a short, but this is very short time frame. It might not be your trade. I attempt to trade larger rotations. I'm not interested in this. If I get into something like this, it's random, and if I don't get scaled, I take a stop. And I still haven't gotten thrilled about that, but I will tell you, I'm very much okay with it. Now, this is too low. This is my retail price. I have to move this now. Do you have questions, by the way? Post them. It's a little hard for me to see the chats, and I apologize to you guys can't see the numbers on this monitor. This is annoying. Let me get this. This is a problem. So now we have the first hour's high, and there's a statistic over 90% probability we take out either first hour's high or low. Now I'm aware of this. I am trading rotations. What is this? I'm showing you trades again. Now if I take this, I got a scale here. This is a short to there, and then looking for this get taken out. I'm just trading one side. I don't say it's a good one. I'm just saying that's what I'm trading. I get a trigger here, break low. Okay, where was my support? It's there. I can sell this. My stop is there or there, and I'm coming back here, and the VHVN is the next target there. So this trades just from there to there to there. And I think I posted this one in Trader Lab. I can't remember. But this is just a structured trade. This is one trade you can learn. Now it can go to zero. Don't forget, right? Can't it? Well, if it can, do I know? No. Do you? If you do, I always say, look me up. I want to hear how you do it. What I know is how the market works. I know where, and you can learn this, behavior might happen, and I know what a trigger looks like, and I know where to put my stop so I can take that stop and protect my account. And I know that where I trade has an edge that favors me, even though the outcome of any trade is random. So I can't be I'm not in the business of being right. I'm not in the business of being sure. I'm only in the business of maybe. You are in the business of maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do anything. Maybe it'll whatever. So that's random, isn't it? So if you want to be a trader, you are operating in a business of randomness. What is random? The rotations. So the trend might be up for today, or we might want to get long to squeeze the shorts, but in this time frame, I'm trading this. But I'm also aware that the market can go up. I can trade from either side. Now, what I'm saying I'm just saying is I can choose one side, and it can just be whatever side, you align with. Currently, in these trades, I'm still taking shorts, and I'm not forgetting that the squeeze can be on. Yesterday's low, notice the liquidity. Now here, now I only took it to there. Why? Let's talk about the rationale of this trade. In the microstructure, and don't forget what I have up here, I get a short. There it is. You see the change? Let's look at the change. Buyers, there's a seller, okay, there's retail, too low, higher. But now if this becomes too high, which I won't know until I have a trigger. Now what about this? Is this a trigger? Is it? Let's see, is it a trigger? How can it be a trigger, Tom? If you look left and your buy stops are here. Mean reversion, heavy on the mean, means you must know where the paper is or the fuel. So if I come back where the sellers were, which was here, and that was a short, am I going to step in front of it? Am I going to take this short? No. Though it could be. I'm just saying, if I took this short, my stop's got to be above this because that's where the buy stops are. My stop's got to be out here. That doesn't fit for me. So I don't have a qualified trade. I have the behavior, you see, because this is reversion, but I don't have the location. The trade that works for me is to get above these guys and squeeze. If I squeeze, which is what this is, so the buy stops are coming out. Thanks for playing. You get a coupon to the buffet. And I have no clue. Remember, clueless. Where's my high volume? Look at the node. Sitting here with the teeth chattering. What's happening, Tom? I don't know. I got the fuel. Now, for the market to go higher, I got to have buyers above it. If it was just these stops coming out because of the squeeze, and then I don't get buyers above here, there's my trigger. Now, what do I know? Well, my buyers were here and my buyers were there, right? There's my outside edge. If I get my trigger, I can sell this, and my stop is going there. Not a recommendation. Let's see what happens. See? And I'm trying to go here, by the way. Everybody see it? This is structured trading. And you can learn this. Now, what is hard, of course, for developing traders is to be able to select a side and define change. By the way, I posted this morning in Trader Lab, and this is not the be right kind of a thing. We're all past that if you're mature. Before a 3-day holiday, what do we anticipate? Short covering, flattening out. What's the market doing right now? The market is up 38 points. NQ's up 183. Why might that be? Because we anticipate it. Now, there's a big difference between anticipation and prediction. I don't predict it. I anticipate it. So in my trade plan, I anticipate potential behavior. What I don't know, will it ever show up? So I don't know that. Where will it show up? I don't know that. When will it show up? I don't know that. How could I know anything more than that? I can't. So I know what might happen, and I have a plan based on my understanding of market mechanics and experience, of course, and I don't have to do anything unless it aligns with my plan. And if the market behavior changes, and now I'm not in alignment, I don't have any trades until I get in alignment. So if I want to take longs and I don't have trades that are qualified for continuation longs, I just sit. It doesn't matter to me. Now, if you feel compelled to be busy or that it's getting away, that's FOMO, you're in trouble. You have to be detached, like almost passive but vigilant. Passive waiting for locations. Already knowing in advance where the location is. This is what most of us, when we start out trading, we don't know anything. It's like a video game. And all it is emotional triggers. Fear, greed. One moment you're fearful and you wait, you hesitate, you're looking for confirmation. Then it's moving away from you. Let's just say you shorted in the hole and now you get run over. Next trade, you're emotionally attached to the right one. Now you're going to be more impulsive. It's revenge trading. You get stopped out on that one. Is that you? By the way, it's all of us. It's just a matter of where you are in your development and your trading maturity, because you have to grow up in the trading. You know, we start out with a fantasy, and it's all of us. So this doesn't single anybody out, and it's not a criticism. It's part of the learning curve. And it's part of the experience. The other part of this that's, I think, very difficult is trying to relate this to something else that you know. This is not relatable in many ways to anything that you're familiar with, except for shopping. Remember, too low. No precision. And look where we come. And where do we come down here? That buyer and that buyer is the same buyer. Now, if you learn order flow, you'll understand this. Now, is that a long? Only if it's in your plan. For me, now my trade ended here, but if I was short and I came up here, oh, it's too high. I can take this as a short, but I then have to come back to here and here because my buyers are here and my liquidity comes in. Again, not necessarily your trade. I'm just showing you ideas. Okay? These are all, now I don't like, so you know, I'm not crazy about trading. These are short rotations for me. But there's 20-point rotations. I can trade these and pay the rent. I mean, but I'm saying most of the time, I'm trying to trade even higher time frames. Now let's come back and look at the language. What do we know? Too low, and we blow through here, then what? Squeezeteria. Let's go further. At 9:30 Central Time, and I post this, this trade, by the way, I think I had posted it. This, what I was posting was, we have a trade in Trader Lab called the IB failure, IBF, and it's the first hour high or low has over 90% probability of getting taken out. Pick one. So considering we're anticipating the short squeeze, I'm thinking this. Now the other part of it is, there's two trades in here. If you think the context has changed to up, there's something called the IB continuation trade. Let me see where this IB is. Oh, I see we got to our target. Look at that. Isn't that amazing? Isn't that amazing, by the way? I am not aware of this. Wasn't this our target? Interesting. So at 9:30 Central Time, we have the IB stat. There's two possible trades here. Along here at the IB structured trade, leaning against this, and the target is this. Okay? Now, so that's a trade I would take. Actually, I did take it. And going for now, but look what's here. We have what in the book? This is where order flow comes in. I'm looking at the liquidity, and look at this here. It's here. I'm seeing this, and then as we're coming up, and this is how you can use order flow, I'm seeing this start to thicken up. Now, when I'm looking at this, of course, the teeth start to chatter again. And here's part of the reason for this. I got my sellers here, and they're front running my auction-based level that I'm targeting. Now, let's remember how the market might work. It's always reverting in all time frames to high volume. This is high volume in a microstructure. Reversion, where might it go? To high volume. And where's high volume on the other side? There. Now let's come out here. What's this? High volume. If it's too high, where might it go? Back there. And then wherever, back here. Same trade. Is this making sense? Give me a yes, give me a no, give me I don't know, or yeah, make some sense. By the way, what am I doing here? The most basic concept is shopping. Shopping. This is nothing more than going to the financial S&P store and shopping. And if a price gets too high in a rotation in any time frame, it may get refuted, and the buyers in this time frame may go, I'm not paying that. And if I find my sellers here, I can exit, I can trade manage, and what I did was short. Just saying. And the trade is called the IB failure. This is the same trade, but it wasn't 9:30 yet. So I took the short, and now same trade, except now we have two trades here, and I'm going to share them with you. And I posted this in Trader Lab. Now the reason I post some stuff, I don't call trades because I take stops. What do you want to take my stop? This is just the real world. There's nobody in this business has an edge on not paying bills or overhead of cost of production. It doesn't exist. So this is where my trigger is, and this is my target. My trigger starts here. So I'm looking at this, and I have a sweep. All this says downward rotation. So, and I have this, more sellers, downward rotation. What am I seeing? Icebergs, I'm seeing my sellers. But what about this, Tom? What are you going to do with this? You can't do it. All right, all right. So the sellers that sold here are there and here. Now I still don't know. When I see this, I'm thinking, right? Break low. Watch. So here now I have absorption and a break. So this high volume, let me put a little line on it. This is my fair price in here. This is my fair price from yesterday's RTH. It is resistance and maybe a target or not. I have no clue. It's a level. And I trade something called the auction. And there's no precision. Think of this like real estate. Location, location. There's a lot of slop. I always think of it like horseshoes and hand grenades. Get in the area. Because here's why. Suppose this price is too high. Do I have to touch it? Or can I find that as we're approaching, the market or the participants are going, this might be too high. Let's get out before we get here. So the participants might perceive this price as too high. I don't have to go there. I can come towards it or whatever. Remember, random. Here's the trigger. Now I sold this and the stop was there and it could be there. Let's just watch the behavior. Target. And this is the next target. Same trade as before. Same as this one, okay? And this one, right? I don't remember exactly what we were doing here. I can't remember trades, but because I was trading very actively, which is not my thing. I like to just hang out and but look at the rotations. When you have rotations, your job's to trade it. So anyway, this is where I was trying to go, and these are structured. I just take a piece, and then a runner. That's a different element, but I'm only talking two-lot configuration. Look where we come. Can you guys see this? Just give me a yes, give me a no, and then the next thing is I want to ask you and answer yes or no. Is this logical? And is this shopping? Yes? No. What do you think? Yes? No. When do I move my stop loss to break even? I'm only when the structure allows me to. Break even is not a concern for me. Let's talk about break even. Here's a great question for everybody who's listening. And listen, same thing here. So listen, we're all the same. What makes you move your stop to break even? Now, you might think the answer's obvious, but is it really? Why do you move your stop to break even? YouTube, there's a little bit of a delay, but answer that, please. Why do you move your Trader Lab? Why would you move your stop to break even? Let's talk about this. What makes us make decisions? So why would we move our stop to break even? I'm sure there's a good reason why you do it. Tell me why you do it. Fear of loss, right, Bernstein? We move our stop to break even, not because it's good practice in a random environment, because the lunatic, Hyde, is risk adverse and cannot differentiate what's in our best interest in this business versus our emotional states, which are driving the bus. This is the key reason most retail traders, even if they learn a methodology like this that I'm sharing, will not sustain themselves, because the emotional or psychological component is the least understood element that will take you out of the business. Every time we make a decision, we have to take a moment and determine, is this based on the best best practice in this business, or is this based on something else? The something else, if it's not related and vetted to what this business actually is, that is the thing that'll take you out of the business. You need to know when you make a decision, what is it based on? Does this make sense? This is, I believe anyone who comes to Trader Lab and does the work and has some ability to learn how to control themselves might be able to build a sustainable business. I believe anyone who comes to Trader Lab does the work and has, and let's just say, has the capacity for this. And this is not complicated. What you have in trading is randomness and multiple time frames. The multiple time frames are always in conflict. Most of the time they're in conflict, because like today, let's say the trend might be down, I don't know, but because of short covering, the market's going up. How do you reconcile that? That's an issue. You have to define that. Anyway, this was the target, okay? Now, what we know is if I'm back inside yesterday's range and this is too low, this sets up a couple possibilities. It sets up longs, which I have not taken any, or I can let it come outside and I continue to take shorts. Now, I haven't taken anything, I stopped. So I have not taken a trade. I haven't even seen any of this. Oh, there you go. So we have our short squeeze now, okay? So there's no more shorts for me. I'm just back in the Barca Lounger. Now, if I was trading, let me show you. I haven't seen this, so I got to look for the levels. Where's that IB? So this here, the last short was like down to here. That's a good short. That puts tuna on the table. This can be a long, or you're done. Now, I would still take shorts in this, this to this. And even if I take this, let me just show it to you. If I take, and I think this was maybe my last trade. I can't remember. See the short to there. See the short, and you're going there. It's still mean reversion to there. That's it right there. See it? So this is where you're trying to go. There. I think this was my last trade. Now I already know there's trouble because of we're in the range and we held a key price, okay? And we already got our shorts trapped. So if I was trading, I'd either be done or I would take the next trade, which is called the IB. I got to find the IB again, though. Is it covered up? No, it's got to be there. No? Where's the IB? Oh, it's up here, isn't it? Let's see. Wow. Oh my goodness. Look at this short. This is a short I would take right here to go there. I wish I would have. Wait a minute. I think I'm out of line here. Wait a minute. I'm confused. I don't remember what I did with this. This is a short. I can't remember if I took this or not. Doesn't matter. Let's look at the this. Oh yeah, I think I did talk about this. That we came up to it and then we had a trigger. You might not be able to get this, okay? I don't think I did either. I can't remember. I know I was looking at it. Yeah, this sets a short up here against this. Okay, but I am conscious of this, so I have to be very careful. We didn't quite get it, and there's about a 67% probability. So I can take shorts. See, there you go. There's your reversion. That's what I remember. Now here, off, done. So I have nothing here now for me. Um, so I would have no trades here. Now, this opens up possibilities. I would still be. What I do on days like this, you could trade from the long side, the short side, both sides. I just trade rotations. In other words, how does this market work? Now we have higher lows, right? So anything that's counter trend is out of alignment. So because then you can get these shallow, you could start selling this stuff and get, squeezed. You see what's going on? So there's no shorts here. You will at some point probably get a rotation to take these guys out, but there's no shorts for me. So I have no trades. I can look for longs. And let me look here. Let's look at this. This was resistance, support, resistance, sweep, back. This is support. This, break high, down. Coming back here is a potential long. This is not really, I don't suggest anybody take this kind of trade, but let me tell you why I would consider it. Because of this. And I'm outside and I have this. So I have, and this is hard because this says down rotation. This is support. This, outside. And you could get really whipsawed in this. Break high, support, break high, trigger, resistance, and then whatever, I don't know, what do we got here? So what I'm doing, and I'm not saying this is good because this is all time frame specific. I'm just trading rotations here today. So I just go like bing bang, and just take pieces. And I can trade long or short. And this is always kind of, oh, I did take that short? Yeah, I don't remember. As far as the IB continuation trade, I would not be running in for it. And it's not a recommendation. You got to follow your plan. This is not mechanical. You have to look at the IB, which I think is over here, maybe. Is that where it is? Yeah. Okay. Well, if it comes back here, I will tell you that there's a couple things you have to be conscious of. It's not a mechanical line in the sand. This is the outside edge. So if it comes down, I would be looking out here. It can also come out in here in alignment with this. It could come anywhere. So if we're looking at a rotation, like out of here, which may or may not happen, then we'd be looking outside for reversion back here and then out the top. Or, since this is our support area, this, and it may not, if it doesn't get there, it just keeps going. Oh, 940. Short near the high scale, IB high, hold. 940. Yeah, I did this one then, right? Is this where it is, Greenhorn Bull? 940. Somewhere in here. Yeah, this is a short. I guess is the one, right? There. Scale IB high. And then this, yeah. From 80, yeah, the short was up here. That's a nice short. To there, And the trade only was from there to there. That's all I was interested in because that's mean reversion. And if the trend is up, and this is counter trend, I'm only trying to come back to the mean. Now I know it can go further, but that's just a trade. Is everybody with me so far? How are we doing in YouTube? Yeah, the fear of loss thing, and thanks everybody in YouTube for responding to that. We're all afraid of it. We all have it. So the only solution to it is a plan. So the emotional stimulus you feel, the fight and flight and, oh, I don't want to give it back, and you're thinking P&L. P&L is not what gives you the P&L. Trade plan and edge over a random distribution of outcomes is what actually gives you your P&L. It's the plan that delivers the P&L, and of course your ability to execute the plan, and that the plan is vetted. That's it. That's as deep as this is. Don't make it any more complicated. So let's look at this. There's your support. Let's just see what it does. Now, unless you're a very short-term trader, these are very high-risk trades because look where the dominant side is. It's on the long side. So these are not necessarily shorts, you see? Now, if somebody was going to take a short, they're going here. But that's counter trend, you see? And why is it counter trend? Because my sellers, which were here, were over them. And what do we see? Buyers, 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 buyers. Why would you sell this? You could. But what do you see? Buyers, support, buyers. See where the thrusts are? Up. Primarily up. Support, up. I don't know. Up. What do you think? Up. Are you going to get long? No. Why not, Tom? You think it's going up. I don't have a trade here. Oh. Why didn't you get long? I'm streaming. Oh. Maybe you should get short because you didn't get long. No. See? Does this make sense? Even if it doesn't make sense, can you see the logic? If you know how to shop, you already have the fundamental chassis of trading. All we're doing is shopping in a real-time pricing mechanism. So in all these rotations, the market is trying to figure out what's too high, what's too low, what's too high, what's too low. Are we going up or down? Guess what? Intraday trend up, long weekend, shorts getting in the squeezeteria, and let's come to a short time frame. Longs in this leg, sell stops under here. And the thing with the counter trend trade, if you trade this, you're going for the sell stops as the fuel. And this is where you try to go. Now, I'm not saying this is a trade anybody ought to take. What I'm trying to share with you is market mechanics, how the market works, why it does what it does, where you might get an alignment, and then all bets are off, literally, because it's random. Why might it come here? Sell stops, sell stops, sell stops, support. So let's see what it does. I'm almost out of time. Any final questions? And by the way, if you're visiting in YouTube, and now remember, this is not aligned. This would be counter trend. You see? So do you take counter trend trades? I suggest you don't, because you want to be concentrating on the dominant side for long continuation trades, not short counter trend trades. If you are compelled, and notice the word I'm using, compelled to trade from both sides without being able to be profitable from a dominant side, and you are going to take stops either way, then you're on your way out of business because you've got FOMO and you don't understand it. You have to learn about yourself. You have no idea who you are when you're in this business. You are the same person who's on planet Earth. Risk adverse, seeking approval, needing to be right. All this is planet Earth. What about when you're not on planet Earth? What are the rules? See? So, if I have enough range, couldn't I short that and cover here? What do you think? Counter trend, isn't it? Is everybody tracking? Do you think you can learn this? The other better question is, do you want to learn it? See? Now, again, remember. And now what this is counter trend. So what's the difference between trading with the trend and counter trend? All right. Well, we certainly know the buyers are in control. We certainly know the last place they took control was here. And we certainly know that there's going to be stops under these because of retail traders like us who are what? Risk adverse. Where do they put their stops? Where everybody else does. Am I going to do that? No. What am I going to do? Use their behavior and trade into their stops. And also know where my buyers were and just use that as a target. And if I get below, I continue on my merry way. If I don't get below, I'm coming back there. That's mean reversion. So I have short to there, and if this holds and I have a sweep, I can come back there. One or the other. Take your pick. And what else do I know? I've got this. I've got this. So this is an area I'm going to observe to see the behavior here. So if I took a short there, it's counter trend. If I entertain a trade in this area, it might be back to there. That's it. This is the range, and then we have to see what happens. And none of these are trade recommendations. So what I have is alignment right now. See it? See the buyers? So the question becomes, are these buyers going to come back in? The buyers were here. I got buyers right here. I have a sweep here, which can give me a counter rotation. So I have to look right here and see what happens. And this is not a recommendation. Nobody should do this because I'm not calling trades. I'm reading the alignment, the location, the liquidity, the structure, and potential trigger if it happens. And the reason for it is all of this. Not a trade recommendation. I take stops. You don't need to take my stop. So let's watch now. What do we have? We have the buyers here. We have a location. We need to see if we can, and we had this sweep, which says down. So right here, I need to get volume in here, and I need to break above the volume just to go there. That's all we're trying to look at here. Whether or not it does it, nobody knows. So I have to wait here. And it's going down. I don't have a trigger. So the way I work this is locations, liquidity, volume, and I don't have a trigger. So I'm still going to look in this area, and it's not a recommendation because this is important, right? Wasn't it a target coming up? If it's now too low and I get my trigger, wherever that might be, I might get long and I'd be coming there and maybe out the top. Not a recommendation. And I'm out of time, guys. Please give a like if you're visiting in YouTube. These are not trade recommendations. I am clueless, but not ignorant. I'm going to stay a little bit longer, maybe a minute. And please give a like if you're visiting in YouTube, just so we could see what might happen with this thing. This is a potential behavior to observe. It doesn't mean it will work. Nothing does in trading. Remember, there's no stream on Monday. Markets are closed for President's Day. I will not be streaming, but I'll be thinking of all of you. Also, be sure to review the last several streams this coming weekend. Pause them. Take screenshots. Pay attention to the front end of the streams where I go over the higher time frame. Everything happens inside of itself, like Matryoshka dolls, a vertical integration of time frames. Thanks again, guys. Thanks for visiting Trader Lab. Remember, Trader Lab's here for all of you. There's a link in the bottom of YouTube. There's no cost. It's open to all of you. And remember, these are never trade recommendations. What you need to be doing is, if you put a trade on, attempt to get risk neutral, and either the trade's going to work or you're going to take a stop. I do. I take stops every day. So it looks like now this, we have to watch this down here. This trade would take a stop. That's just what it is. Now we want to still watch here. Does it keep going down? Anyway, take care, everybody. Hope you got something from the stream today. Remember, the outcome of any trade is random. Nobody has any clue. I don't, at least. If you do, again, help me out. I'd like to get better. But it's just a trade. And I don't call trades. That's why I said just let's observe it. Take care again, guys. I'll see you on Tuesday. Review this stream and the other ones. Come to the Trader Lab. There's no cost for it. Use the link in the bottom of YouTube. Thanks again, guys. I have to go. They're going to pull the plug on me here, and I'll get in big trouble for going over. So see you later. Have a good one, guys. Thanks again for visiting the Trader Lab today.